This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending August 14th, 2021. Our question this week is, what is Fed tapering? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average increased 0.04% on Friday and was up 0.87% for the week. The S&P 500 increased 0.16% on Friday and was up 0.71% for the week. The Nasdaq increased 0.04% on Friday but was down minus 0.09% for the week. Looking at the week, we can see that there were 11 up finishes versus 4 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Tuesday and Wednesday, the Dow Jones Industrial Average and the S&P 500 finished up, but the Nasdaq finished down. On Thursday and Friday, all 3 major indexes finished up. The Dow Jones Industrial Average and the S&P 500 hit all-time highs on Friday. The new unemployment claims were 375,000 versus 375,000 expected. U.S. productivity growth slowed in the second quarter and labor costs were revised downward. Early in the week, crude oil prices slid more than 4%. As oil prices began to recover, the White House called on OPEC to boost oil production. In July, consumer prices jumped 5.4%, while wholesale prices rose 1% in July. And Dallas Fed President Robert Kaplan said that the central bank, that is the Fed, should begin to taper in October. New unemployment claims, the U.S. productivity growth rate and labor costs, crude oil price changes, White House calls to OPEC to boost oil production, monthly consumer price increases, wholesale price increases, and Federal Reserve President's announcements on tapering are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is Fed tapering? The Federal Reserve buys assets like U.S. Treasuries and mortgage-backed securities every month. Currently, the Fed purchases about $120 billion worth of U.S. Treasuries every month. Fed tapering is when the Fed starts to gradually purchase less assets than it had been buying in the past. For example, if the Fed gradually reduces its purchases to $100 billion worth of U.S. Treasuries, then the Fed would be tapering. Now, know that the Federal Reserve creates money out of thin air to make its purchases. They create the money they need by typing numbers into a computer system. What would you do if you could create money to buy whatever you want by typing numbers into your bank account? Would you invest the money in the stock market? Would you buy stocks? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. So, if you are going to make any money or develop wealth in the stock market, you're going to have to teach yourself. In order to learn to make money in the stock market, you must RSI, that is, Read, Save, and Invest. Formal school taught you how to read, but society and the powers that be discourages you from reading. School taught you to be a worker. They did not teach you how to be an investor. And they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can get free from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out the list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up or down or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list for the week ending August 14th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was 3D Systems Corporation, ticker symbol DDD. It's in the first column. It increased 8.97% for the week, but it was down minus 9.41% on Friday. 3D Systems is a 3D printer company. They produce 3D printers and digital manufacturing solutions for customers worldwide. Looking at a summary of results, you can see that 3D has increased 187.6% year to date. I did not trade 3D this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 0.34%. It's about even versus 19.27% up for SPY, a difference of 19.61%. The Southside is losing to SPY by almost 20%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit for a few months. However, it has been recovering for the last 3 weeks or so. Will the recovery continue? We'll see. The portfolio is 68.53% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 19.25% of the portfolio. Cash is 12.22%. The cash flow generated for the week was 0.74% of the portfolio account value. The account value changed by 2.78%. Meanwhile, the S&P 500 ETF SPY changed by 0.78%. I sold option contracts on 2 positions this week, 1 call and 1 put, that ranged from $226.38 to $633.38. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Please check out past videos for more questions of the week. And Like, share, and subscribe.